Every morning, I get a handmade espresso from my dealer. Help me prepare for day ahead. Just as I was talking about it, the espresso arrived. Busy on work? No problem. My dealer got me. Get you updated on market news. Anytime, anywhere. Choose iPack, you first, always. Welcome to iPack, your trusted trading platform. At iPack, we keep you informed with latest news, trading ideas, allow you invest with confidence. We provide tailored investment advice to seize your opportunity and maximize your return. We're here whenever you need us, providing dedicated, real-time support. We provide one-stop solution in investment. Choose iPack, you first, always. Every morning, I get a handmade espresso from my dealer. Help me prepare for day ahead. Just as I was talking about it, the espresso arrived. Busy on work? No problem. My dealer got me. Get you updated on market news. Anytime, anywhere. Choose iPack, you first, always. Welcome to iPack, your trusted trading platform. At iPack, we keep you informed with latest news, trading ideas, allow you invest with confidence. We provide tailored investment advice to seize your opportunity and maximize your return. We're here whenever you need us, providing dedicated, real-time support. We provide one-stop solution in investment. Choose iPack, you first, always.
Hi, good evening, everyone. Can you guys hear me? This is Elky here with you guys today on the topic chart patterns. All right, good evening, everyone. Happy Tuesday. Okay, let me share my screen real quick. All right. Okay. Okay. All right. Okay. So if you can hear me clearly, please let me know. Okay. Please let me know by typing in the comments. So, yeah. Otherwise, we're gonna just go ahead and start with our section for today. All right. So good evening, everyone. This is Elky here with you guys from Inter-Pacific Securities. And today our topic, our title is Identify and Utilize Chart Pattern and how to use all these chart patterns to maximize your trading returns. Okay, so good evening, everyone. This is Elky here with you guys today, and I'm from Inter-Pacific, which also called iPack Online. Okay, so basically, iPack Online is an online trading solutions by real brokers who has been around in Bursa Malaysia since 1972. That's more than 50 years, under the name of Inter-Pacific Securities. And we are also a subsidiary of Berjaya Corporations, which is a listed company on Bursa Malaysia. Okay, so personally, I have been in this industry since 2012, and I have been in the stock market since 2015. Okay, so using my past experience, especially I was once proprietary traders. I've been applying all these TA technical techniques, okay, TA techniques, and also engaging markets for more than 10 plus years. And with all this experience and also knowledge I learned, I hope that I'm able to share with you all some of the knowledge, and hopefully through today's section you guys will have a better understanding on the chart patterns, or even a better way to identify what are the patterns around and help you guys in your trading. Okay, so before we start our sections, okay, before we start our sections, good evening, Oi. Okay, we're gonna, this is the disclaimer. Okay, so our sections today, as usual, is we are really focused on investor education purposes. Okay, we are having all this program and also all these contents that we are putting up in our YouTube, iPack TV, and also our Facebook channel. Okay, hopefully we're able to produce some of these contents and also some of these videos to help the traders outside, let it be traders or retail investors, to master or enhance their skill in picking up the right stocks and also making a better returns. Okay, yep. So in between of today's section, I will put up some of the case studies, some of the charts, all this, but these are for illustration and also as an example. Yeah, okay, there's no buy or sell call today. All right, if you want to know a little bit more detail about the view, all this thing, you can always join us for our monthly traders talk, which gonna happen on the first Monday every month. Okay, during that section we will be talking about what's the our monthly outlook, what are things that to look out for, and also some of the updates of the markets. Okay, for today it will be really focused on what we're gonna talk about on the TA chart pattern. Okay, so before we start the sections, so I believe many of you guys right here today, you might be wanting to some of you might know a little bit about chart patterns, having people hearing about talking about like double bottom, like triangle, like flag, all this, but maybe you have been wondering, hey, is this thing really triangle, is this thing really flag, or what? You have been doubting yourself, don't know whether it's true or not. Okay, or you have been trying to practice some of these patterns, but you don't know whether you should hold on to it, or you should like once you see money just get out. Okay, or even sometimes you might be exited early, but eventually the formation actually come true and really give you the 50 or even 100% returns. Okay, so if you have been go through some of these issues, some of this process. Okay, so throughout today's section, hopefully I will able to help you guys to achieve some of these objective for tonight. Okay, which is at the end of the section today. Hopefully, we will be able to identify some of these key characteristics of the chart patterns, some of these chart patterns. Okay, and also help you guys to better understand, also accurately identify all these patterns, and also make a call whether you want to get in early or you want to get it on the breakout, or even identify when it is a false break and call a cut loss, or even exit the positions. Okay, yeah. So before I start, let me adjust on the screen a little bit. Okay, because it seems to be blocking. Okay, all right. Okay, let us continue. Okay. Okay, yep. Okay, so like I said, we will go through some of the introductions, some of what are the chart patterns around, and also what are the tools for further enhancements. Okay, and the last will be Q&A sections. Okay, so if you're in between, if you have any questions, you can feel free to put under the comment, and we will go to every single questions. Yep. Okay, so let's start our section for today. Okay, so anatomy of price charts. I believe many of you guys have seen a chart before. So basically, a chart itself is actually just sequence of price plotted over over a specific time frame. Okay, it really depends on what kind of time frame that you use, and those very common one will be like daily, hourly, 15 minutes, and for some of the scalpers, to some of those professional traders, they might even use up to minute charts. Yeah. So for me personally, when I was doing my prop trading, when I'm doing my intraday scalping, I will be trading using 1 minute chart. Okay. So yeah. Okay. So using the chart. Okay, using the chart, we will be doing analysis like candlestick reading, chart patterns, and also some of the indicators. Okay, especially for those who are using naked chart. Okay, naked chart meaning it is just a chart without any indicator. Okay, so purely we are just using candlestick. Okay, reading of the candlestick, and also chart patterns to help us decide whether we want to enter a position or not. Okay, so if you are not practicing any technical indicators, chart patterns is really crucial, and it's really important for you, okay, to help you to identify whether you want to get into the position and hold through it, or you just want to hit and run. Okay, so I believe many of you guys have been seeing some of this type of the chart, like line charts, like OHLC, open high low close bar charts, candlestick charts, and also even candlestick Heikin Nishi charts. All this. Okay, so there are so many charts in the markets in around us. So why do we need to have so many charts? So actually, every charts, they have their own purpose. Like line charts, usually you see intraday charts all this present in line, because in a very fast way, in a snap, it will tells you what's the trend. Okay, so we can see very clearly for Tenaga Nasional Berhad TNB, we can see in 2024 it's going on a very strong uptrend. We can see it's very clear uptrend, and for this year, starting the quarter of the year, or the last quarter of the year, TNB has been trading without much a trend. It has been stagnant, trading on sideways around 13 ringgit to 15 ringgit area. Okay, as for bar charts, okay, bar chart is actually the best when for naked chart trader to identify chart patterns. Okay, yeah. So for some of you guys who are practicing, or who wants to learn how to better identify bar charts, you identify chart patterns, you can actually switching between bar chart and candlestick charts to identify the patterns. Using bar chart itself can help you to identify the patterns easier, and also more giving you a clearer illustration. Okay, but don't worry, today we will still stick with the candlestick chart, but when you are practicing at your end, you can always use bar chart to share with you. Okay, so for example, you can see right here is like a flag like formations, okay, with the rally, with the flag, okay, with the retracement right over here, a parallel retracement. Okay, so you can see with bar charts in one glance, it's so easy for you to identify the chart pattern itself. Okay, yeah. So of course, candlestick chart is the one of the most commonly used chart type, and most of the people that are using to identify where are the reversal signals to get in and out swiftly. Okay, and we also have another candlestick chart which is Heikin that's giving us a better strategy in holding and riding on the bull trend. Okay, riding on the trend itself. Okay, yeah. So we can see every chart itself is they serve a different purposes. Okay, yeah. So throughout all these charts, okay, most of throughout all these charts, although they are serving different purposes, okay, it's very crucial for us to learn the chart pattern, because as the chart pattern will help us to identify where are the buyers and sellers and where is the market going. Okay, yeah. So some of the traders in the markets, how they actually try to learn or they try to work on the chart pattern, they might be trying to just memorizing it. Okay, but for me, chart pattern is not just about it's just not about the patterns. It's not just about pictures, memorizing the pictures, but it is telling us what are the buyers and also the sellers in the markets they are trying to achieve. Okay, the battle ranging between the bulls and the bears. Okay, so a good quote that this is my favorite quote from Shakespeare, where the science of chart reading, understanding the chart pattern, is not just memorizing, but also trying to understand and feel it. Okay, feel the momentum in the markets. Some of you might laugh, hey, Elky, what is all this feeling, all this about? But as you're trading, spending enough time looking at the charts, spending enough time to reading the patterns, understanding the market flow, you can actually feel it. That's something that we call market intuition, whereby before the spine, before the rally, you have that so-called market feel. You feel like it's coming. Okay, you feel like it's coming. So sometimes when you are looking at the stock market, you seeing the bid ask is flipping, you might have that feeling that it seems like it's coming, the price. Yeah, so don't doubt yourself. That's the market feel that you develop throughout the time. Okay, so before we able to go into market feel, we have to understand all these patterns and some of the main characteristics that help you guys to able capture it and help you guys to develop a better sense about how the market will move. Okay, yeah. So there are actually two main types of chart patterns whereby one is continuation and one is reversal, and in between some of these patterns they might be bilateral, whereby it can be either up or down. Okay, yeah. As for continuation, it means that all this pattern is likely to continue to expand on the current ongoing trend. Okay, whereby reversal will be the trend is changing directions. All right, pretty simple, pretty straightforward. Okay, so some of these chart patterns that we're gonna go through, we're not gonna go through all today, but we're gonna go through some of these. Like there are a few on continuations, like flag, like pennant, like triangle. So we will go through some of these popular one and most commonly used and commonly able to identify. Okay, yep. Okay, so we're gonna start with continuation chart pattern first. Okay, yeah. So some of the patterns that we're gonna look into will be like flag, pennant, triangle, and also price channel for today. Okay, so these four patterns that we're gonna go through today, please it's very, very important to remember that all these patterns, they are continuation chart patterns, meaning we only want to use all these patterns, or once we identify the patterns, we want to look at the market that the current trend is gonna continue to go on. Okay, let's say if we identify a flag formations in a bullish market, we are seeing the market can continue go higher on the breakout. Or if we identify triangle in a downtrend market, we are expecting upon the breakout, the market gonna continue to sell down. Okay, yeah. So as we're going into the patterns itself, hopefully you guys remember all these points, and it will able to help you guys to apply it accordingly. Okay, first we're gonna start with flag or pennant. I'm gonna combine flag and pennant because these two patterns, they are actually very similar. Okay, so regardless is flag or pennant, okay, the very first thing when we comes into flag or pennant is we need to find the pole. Okay, so try to imagine when you're seeing a flag. Usually it's not just flag itself, right? It has the flagpole. Okay, it has the flagpole. Okay, which in the markets, the pole is actually the spike or the rally. Okay, so before we able identify a flag or a panel, the first thing that we need to see is the markets, the chart. It must present a spike or a rally. It can be in one candle, it can be 3, 4, 5 candles, but it has to be a strong one, which this will indicate the momentum of the markets, because flag and pennant, they are momentum kind of chart patterns. Okay, so next, after the spike or rally, okay, let's say the market has been shoot up 20% higher, the market have to take a break. Even for short term, if you look into the logic of the market, is after the share price move out of 30% across, maybe across 2 days, 3 days, 4 days, like recently with the Israel bombing Iran's, the oil price shoot up, Heng Yuan hibiscus shoot up. After shooting up for 2 days, we will definitely see some profit taking, right? So this is where the retracement come in. Okay, but if it's gonna form a flag or pennant formations, usually the retracement will be mild. It's not gonna be a strong retracement, but it's gonna be a mild retracement. Okay, and the volume will be small and diminishing. Okay, so for flag, the first one is the flag. We will see the flag, the retracement coming in. Oh, sorry. The retracement will be coming in parallel formations like this coming down. Okay, so usually you can draw 2 lines for the retracement. Okay, okay. As for pennants, you will be seeing a pennant lights kind of formations. Okay, whereby you can draw a very small triangle. Okay, with the consolidation. So these are the candles. Okay, it can be 3 candles, it can be 5 candles, but it shouldn't be too long. Okay, because remember, we are saying that flag and pennants, they are momentum for chart patterns. Okay, so it should be it should be quite quick. It could be 3 candles, it could be 3 days formation, whereby after the T3 retrace on the T3, then on T4, T5 itself, we should start seeing the rebound and also even the breakout. So you can see right over here, for my candles, I only put 3 or 4. It should be a shorter term kind of patterns. Okay, yeah. So the entry for flag and pennant, it will be coming in on the breakouts of the trend line that you draw for flag. Okay, remember we draw a parallel line for the flag based on the retracement. Okay, the high and low. Okay, so upon the breakout, this is where we're gonna go in. Okay, similarly on the pennants. Okay, yeah. So from where after we go in, okay, for pennant and flag formations, we'll be taking the pole, okay, as the measurements, as a guide for our targets. Okay, starting from the low of the retrace, starting at from the low of the retracement. Okay, so example, okay, on CMB, okay, on CMB you can see CMB share price has shoot up from 5 ringgit 90 cents all the way to 6 ringgit 40 cents. That's about like 10% in 3 days. Okay, we have some profit taking, and during the profit taking, we also seeing that the volume has been coming lower. Okay, from the high volume coming down, it's diminishing, and upon the breakout, it shoot up. Okay, yeah. So it didn't achieve the target within the 2 days, but eventually it had another pullback stalling, okay, and achieved the pullback. Okay, but we can see the break is very momentum, very quick. Okay, this is what we call about a momentum chart pattern. Okay, yeah. So similarly, on the same charts, we can see after the breakout is also another very strong up candle on the CMB. We can see after it formed the flag formations, it's a momentum breakout, and the candle is actually squeezing together towards near the 65, maybe 65, 6.56, 6.57 area. It just kept around there, squeezing with low momentum, trying for the explode. Okay, so we can see upon the breakout, we have another momentum move. All right, okay. So when you are trading, you had a very strong move, and then after you got in, the chart, the price itself actually slowed down, but it's still hanging in between the range, and every day it's recording a higher low. Okay, so during these periods, please be patient. It is forming a potential pennant. Okay, as long it is not breaking the lowest. Okay, as long as it's not breaking the lowest of the retracement, you are still in a very good hand. Okay, especially for these pattern formations. Okay, it's just squeezing. In Chinese we call 别大招. It's just consolidate the momentum for the breakouts, and upon breakout we will see such a momentum move, and eventually from there 6 ringgit 60 cents it went all the way to 7 ringgit 30 cents without very much of any retracement. Okay, yeah. So in between you can see the volume also coming down. So for flag and pennants, it is a momentum kind of chart pattern whereby these are some of the good example. Okay, yeah. And of course we do have some of this failed pennant whereby we can see it's also it is for this IT Max, it have moved from 3 ringgit 40 cents to 4 ringgit 20 cents. That's more than 20% move in about like 2 weeks. Okay, and it pull back, retrace, and we can see we can form a small pennant formations. Okay, this is not really a good one. Okay, as we can see with the previous formation with a flat and also higher low, this is actually my preferred type of pennants. Okay, whereby the breakout on this resistance we should see a very strong move. Okay, with this kind of pennants, okay, it's also a triangle, but upon the breakout we have one risk, which is it has to clear the high that it recorded, which at this for IT Max this case is 4 ringgit 15 cents. Okay, so we can see upon the breakout, this is where we go in on the trend lines. Okay, and upon testing 4 ringgit 15 cents, it wasn't able to cut through. Okay, it wasn't able to cut through, and then it formed a rejection, and this is the point where we want to say, okay, this might not work, and we have to stop out if it breaks the lowest point of the retracement for this pennant, and eventually it failed, and it went all the way down. Okay, overshadow the previous rally. Okay, yeah, so this is one of the failed examples. So regardless for pennant or for flags, the stop loss, it will be at the low of the retracement. If it break out and come back and break the low of the retracement, do cut loss, because for pennant and flag, we are trading on a very momentum kind, a very fast kind of chart patterns. Okay, yeah, so another example of pennant. So you can see this is a very similar pennant that we are talking about. It's holding at 5 ringgit for 74 cents, and then with slowing down, coming down of the lower high. Okay, squeezing, and the breakout on Sunway Constructions. Okay, yeah, so we can see the volume also coming down slowly. So Sunway Construction is having this pattern breakout. But one thing about Sunway Construction right over here is we are yet to see a very strong surge. Okay, so so at this point, as long Sunway Construction is holding above 5 ringgit 74 cents area, okay, the pennant formation that we identify for Sunway Construction, it will still valid, and it might still able to achieve the 1-to-1 target of a pennant. Okay, so for these live cases, you can continue to monitor and see how far Sunway Construction can go from here. All right, okay, so keynotes. Okay, so in regardless is flag or pennant, okay, pole is very, very important when you are trading on flag and pennant formations. Okay, flag and pennant formation, this chart pattern could be the one of the most commonly used or most commonly traded patterns that's for traders, especially for retailers. Okay, because it's quite easily spotted, it's quite easily identified, and it occurred quite frequently. Okay, but many people ignore that we must have the pull, which is the momentum, the rally, the spikes before we engage, or even calling it a flag or pennant chart patterns. Okay, because flag and pennant chart pattern, they are momentum kind of chart pattern. That's why we must have the spikes, we must have the momentum move in order to have the continuous momentum upon the breakouts. Okay, yeah, so if you during the pullback, during retracement, if you identify the volume is diminishing, it is a healthy sign, and it should help you, it should convince you that this chart pattern gonna continue and it's gonna be a solid breakout. And upon breakout, the volume should start picking up and go up from there. Okay, all right, the next one, it will be triangle. Okay, triangle wise, triangle is very, very different from pennants. You might ask, so one of my clients asked me, hey, Elky, pennants is also like a triangle shape on the retracement. Triangle is also a triangle shape. Why they have a different name? Okay, so pennants and flag usually, okay, the retracement, the pullback is just about like 20 to 30% of the rally of the spikes, because it is a momentum kind of chart patterns. But for triangle is a major chart patterns. Okay, it doesn't necessarily need to have a spike, but it should have a very strong and solid trend, a solid rally that we are seeing. Okay, it had a very strong rally. It can happen, the rally could be 1 month, 2 months, or all this. Okay, and from there we can have a 5-wave retracement. Okay, so how to calculate this 5-wave? Okay, so first is we must have a rally, a very strong rally. This can be this rally could be like I said, could be a week kind of rally, a month kind of rally, or even 3 months kind of rally. And from there, okay, it really depends on how big it is the structure. Okay, and after it hit the peak and start retracing, okay, this is where we start counting. Okay, the first retracement down, the first downswing, okay, we will mark it as, oops, sorry. Okay, we're gonna mark it as number 1. Okay, this will be the swing number 1. Okay, 1, then it will rebound, okay, forming a lower high. Okay, then we're gonna have number 2. So it's gonna continue to retrace, but in between, in the process, you will be seeing that volume is slowing down. Okay, lower volume, but a higher low happening at the 0.3, and again 0.4, again a lower high. Okay, a lower high. Okay, and 0.5 will continue to have a higher low at even very little volume at this point. Okay, so throughout the whole process, it can take much longer, and eventually after the 5-wave, the volume, the participation from the retailer could be really minimal, and people, normal retailer might not even looking at this counter at these stocks anymore. Okay, but if you are a chartist, if you have been following very closely, then you'll be able to identify the triangle has coming to near to the end for a potential breakout. Okay, yeah. Then from there, we will gonna long on the breakout of the trend line, connecting the high, all the highs together. Okay, so that is where we're gonna go in and long on the breakouts. Okay, so for triangle wise, they have ascending triangle, they have descending triangle. Okay, so it really depends on how you mark the triangle. Okay, but what is very important for triangle, it will be we must have the rally. Okay, so you can see for again CMB as our example, this rally that happened, it took 2 months to have this rally to settle down, and then we have the retracement. Okay, the one pullback, 1, 2, 3, 4, 5. Okay, the 5 didn't touch the trend lines, but it's a higher low and the breakout. Okay, yeah. So we can see upon the breakout, there is immediate the buy interest, pullback, retest the triangle, and then continue trend higher. Okay, yeah. So for those who are a conservative trader, or if you are active traders, you don't want to stuck in the position for too long, you can buy on the breakout of the trend line, and you can take profits in between, also adding position if it pull back, testing the trend line and rebounds. So there are 2 buying points for triangle, which is first, number 1 is the one that I mentioned just now, and number 2 will be touching the trend line, rebounds on the reversal, candlestick reversal. Okay, right over here. Okay, yep. So we can see for triangle, usually the retracement, one of the major characteristic for triangle that you might want to remember is the retracement. It could be 30%, and many times the one that I seen is about like in 50%. Okay, so you can pull a Fibonacci retracement. You can see it's just hold well at 50% retracement level and then start bouncing. Okay, yeah. As for the targets wise, as I mentioned, we can use the rally. Okay, similarly like what we are using on the flag and also pattern, we mark it from the low of the retracement. Okay, and project it up, then that would be our target projection for triangle, which at this for SMB case study, it will be at 5 ringgit 60 cents, which hit about like near to 6 months later after the breakouts. Okay, yep. So that's why you can see from here, from this illustration, triangle, it is a major chart pattern breakout. Okay, so for you, if you are trading on triangle, okay, you can actively get in and get out in between. Okay, but do remember that this is a major chart patterns, and you might really want to hold some of your position. If you are getting in 10,000 units or 20,000 units, you might want to take profit 15,000 units and leaving 5,000 units, try to ride for the targets. And in between, if you see the weakness in the price chart but it's still holding along with the trend line or with the moving average and start reversing, you can go in and scalp through the trend itself. All right, okay, yeah. So this is one thing that I really like about triangle, whereby it really gives a lot of trading opportunity, especially after the breakout. We are seeing the trend. There are multiple engagement that we were able to get involved. Okay, so another examples that we're gonna put on is Southern on Southern Cable. We can see this is the rally. Okay, this is the rally, and then we have the start pulling back. Okay, it has rallied from 40 cents all the way to 1 ringgit. Okay, so that's 150% of rally throughout the 7 months, and from there we have the pullback happening. 1, 2, 3, 4, 5 breakouts. Pullback past the trend lines and continuations. Okay, so two entry point, buying points. One is upon the breakout and one is pullback, rebound with reversal. Then we can go in. Okay, yeah. So similarly, if we applied the Fibonacci retracement, you can see the pullback is just nice at 50% retracement. Okay, and start bouncing off. Okay, and if we use the target wise, okay, if we use the target plotting from the low of the retracement, the targets that we are projecting, it will be at 1 ringgit 40 cents. Okay, that's about like 50 cents high, 50 cents higher from the 90 cents breakouts. Okay, that's about 50% upside upon the breakout for this triangle. So do remember, triangle is more towards a longer term kind of formations whereby you might want to hold on to it. Okay. Yep. So some of the keynotes that we want to remember about triangle as a summary. We want to remember that it is a big structural pattern. Okay, the ideal retracement is about like 50% and definitely not more than 61.8%, because if it retraces too deep, then we might have trouble when it comes to the rebound and also sustaining the rebound and the break for and push for the breakouts. Okay. All right. The third one for the continuation chart pattern will be the price channel. Okay. So this is the last one for the continuation patterns. Okay. So basically, price channel is quite self-explanatory, whereby when the stock price is trading between two parallel lines, okay, between two parallel lines, we can, if we connect the high and the low together, we getting two parallel lines, then it is trading in price channel. Okay, yeah. So there are two ways. Once we identify the price is trading in a price channel, then there are two ways to engage. Okay, so how soon we can able to identify it is a price channel? The earliest that we able to identify is it has to at least form a too high and too low. And if we are buying it, then we need at least a high high and also a high low. And when it comes to the third high, okay, we are unable to engage because if we are buying, but the very first engagement that we're gonna get in is at the so-called the third low, which is the second higher low. Okay, so the first way is we long on the rebounds along the trend lines. Okay, yeah. So if we able for some of you guys, if you know how to use RSI or even using the stochastic oscillator, you might you can try to use the overbought or oversold signal. Okay, whereby in this case, if we are buying, we can try to see if with the pullback right over here hitting the trend line, the price chart, the channel line. Okay, if it is also a rebound from the oversold on the stochastic or RSI, then it could be a confirmation, or even it enhance our winning probability. Okay, so how about the breakouts? If we break out, do we want to engage? Okay, so if we are trading on the price channel, the second way will be the breakout methods. Okay, they are very similar to triangle that what we witnessed just now. There are two entry point for breakout of the price channel. The very first one is long on the breakout of the trend line, but this impose a higher chances of fatality, whereby a higher chance of false break. It might break a bit and then come back into the channel and then continue in the channel. Okay, then it will become a false break. Okay, for confirmation and also avoid the false break, then we might want to wait for retest the trend line, rebreak. Okay, so this is the entry point for the rebreak. And also from here we can see that the trend is changing from marking this as the low, and this is the higher low, and breaking into a higher high. Okay, over here. Okay, so this is the breakout pullback continuation kind of formation that we are looking at. With some of the example for the price channel. Okay, so we can see Gamuda is going on an uptrend. Okay, so whenever we come to the trend lines, okay, so this 1, 2, 3, okay, so we can see as we mark over here, the very first engagement that we actually can start getting in, it will be here, here, and also here. When it touch the trend line, start rebounding with a bullish reversal signal, with a bullish engulfing. hammer breakouts. Okay, these are some of the places that we able to get in. Okay, so if we are getting in here on the breakout of the low of the reversal candlestick, we have to cut loss, and eventually this is a false break downwards, and it recovered with the, we can see with the double reversal signal. So we go back in long here, and then this is submit that we're able to get in. Okay, so it's very crucial to cut loss here if it unable to hold on and rebound from the trend line, because we can see if we don't cut loss here, similarly upon this breakdown, we're not going to cut loss as well. If we're having the not cutting loss mentality, then we will be caught on this massive selling down. Okay, so if you buy on the rebound on the trend lines, okay, the reversal candlestick on the trend line, do cut loss if it unable to hold along the trend line and break lower below the trend line. Okay, in this case we have a false break, so we can see upon clearing both lines, that's definitely we don't want to hope for the rebound and we really want to cut loss. Okay, similarly on public bank, we can see that public bank is forming two high here, continue forming the high. So at this point we don't see it's touching the low until right over here. Okay, so we only start to engage the price breakout will be this right over here. Okay, as it touch and rebound, confirming the rebound, and another one will be the bullish engulfing over here at 4.40 cents, which this just give us about like 10 cents mids before it come lower. Okay, so for channel trading on the channel wise, in illustration it might looks, wow, there's a lot of mid, the price go from 4.10 cents to 4.50 cents, but we won't be able to participate throughout the whole uptrend, and we only able to identify after it have we have confirmed the channel and then start bouncing off from the trend line itself. Okay, yeah, so this is another this is the current ongoing upward channel that happening on the KPJ. Okay, so you can see KPJ touching the low, okay, parallel, and start bouncing off, and right now is testing the support trend line again. Okay, so for the down trend line, channel, one example is Petronas Chemical, whereby we can see as we connect the high and also the low, it is going on the downward channel, and it's at the middle, not seeing anywhere. So if we continue to come back lower, touching the support trend line and bounce off, we might see a rebound to test the trend lines. Okay, here we will try to see if there's any support, or we look for the breakouts, pullback testing the trend line and developing into an uptrend for PCAM. Okay, so for price channel wise, okay, for price channel, okay, so the if we can also if we want to increase our winning probability, winning chances, we can also look into the volume, whereby if it's retracing, okay, if it's retracing towards the support trend line, we should see a lower volume. Okay, yeah, and if we are trading on for you guys that have been using RSI and stochastics, if you are seeing that the RSI and stochastics are not indicating oversold on the pullback, but hovering near the overbought regions, okay, if you're buying, it is normal as well, because it is going on a strong uptrend. Okay, yeah. All right, so that will be the end of the continuation chart pattern. So if you have any questions regarding flag, regarding pennant, triangle, or price channel, please feel free to put down in the column in the comments, and we will go we'll attend to it at during the Q&A sections. Okay, yeah. So next we're gonna look at the reversal chart patterns. Okay, so some of the reversal chart patterns that we're gonna cover today will be the double top or double bottom, head and shoulder, and also the rounding formations. Okay, yeah. So I believe double top or double bottom formation is one of the formation that many of you guys will have encountered before, okay, or even you're using, because double top and double bottom it comes really handy when we couple it with the identifying the support and resistance on the price charts. Okay, so basically double top and double bottom, what it's telling us is it tested the resistance. Okay, for this is double top, it tested the resistance and it unable to break through the resistance, but reversal to come down, reversal and come down. Okay, as for double bottom, the price is selling down, it tests the support level, rebound again, tests the support level, and bouncing off from the support level. Okay, yeah. So it formed like a M shape and also a W shape over here. Okay, so one way to identify, one way to further enhance our winning probability or the winning chances of double top and double bottom is when it is forming the second peak or second trout over here. Okay, because this, we can see this is the uptrend, pullback, retest the resistance. This is the uptrend, okay, the trend following swing wave. Okay, so if we are seeing a lower volume compared to the previous rally, it is telling us that the buying interests have slowed down. So when we are seeing the reversal happening on the double top, it will be more convincing for us to engage in this double top. Similarly, on the double bottom, we had the sell down, market rebound, technical rebound, again test back the support level, but with this round, testing the support, this selling down, it's imposing a lower volume, telling us that whoever who wanted to sell, they have sold it or sell it during technical rebound, and this round there's not much sell it anymore. Okay, yeah. So when it's forming the second trout, if there's lower volume and start rebounding with volume increasing, then that will convince us that it is a valid and strong double bottom, and we might want to jump in and trade it. Okay, so there are two entry for double top or double bottom. One is at the reversal from the support, the resistance or the support level. Okay, and another one will be at the breakout of the midpoint. Okay, the midpoint is this one. Okay, the previous low or the previous high, the nearest low or the nearest high. Okay, so one example on double bottom, example of double bottom is on Genting. Okay, we can see Genting has sold down from 5 ringgit 10 cents to near to 4 ringgit level. Okay, rebounds, and again the selling down. Okay, we can see when during this sell down the volume has increased. Okay, and on the second sell down the volume actually diminishes. It has a lower average volume, and upon the rebound we are seeing a higher volume appearing. Okay, yeah, and as it touched near the 4 ringgit levels, we seeing the strong reversal signal. Okay, upon the breakouts we had the consolidations. If you don't want to just chase in long on the breakouts, sometimes we able to see consolidations and rebreak. Okay, reversal to get in, or you long on the consolidation breakouts. Okay, you might wonder, okay, Elky, you say long on the consolidation breakout after the midpoint, or if I want to long on the midpoint, is there any mid for me to eat or not? Okay, so for the double bottom, okay, the target will be we are gonna take the low, okay, the low of the W shape, okay, towards the neckline, okay, and from the neckline project up for our 1-to-1 target. Okay, so if our target is somewhere around here, which is also the resistance at 5 ringgit 10 cents, okay, buying at the consolidation breakout at 4 ringgit 70 cents 75 cents, it still gives us about like 35 cents mid over here. Okay, or you can get out near 5 ringgit lah. okay, the round figure. And upon this consolidation breakout, you can see it just happened within 2 days, okay, to reach the 5 ringgit area. Okay, similarly on copy or Oriental, okay, Oriental copy, we are seeing that after it have continued pressure upwards after the IPO listing, we had the sell downs, testing the support at 64 cents and start rebounding. Okay, you can see after it rebounds, break the midpoint, it pull back, sit on the midpoint, and again rebounds to trade higher. Okay, so if we are taking the load from the bottom towards the midpoint and project it up, the target will be about like 14% higher from the midpoint, which is somewhere around 84 cents. Okay, so if you are buying on the rebound reversal from the midpoints, you are still having about like near to 10% upside for Oriental copy. Okay, example for double top wise, we can see this happens in 2020. Okay, after a massive rally in the glove stock Supermax, okay, we had a very sharp selling downs, rebound back near to the high, but again immediately we see the sharp selling. Okay, so here we are seeing a very sharp reversal. Again, it have another reversal and break the midpoint over there. Okay, we are seeing the further selling. Okay, we can see even when it attempt to retest the resistance area, the volume is coming down despite that the price is pressuring upwards. Okay, so this is what we mean by it. When it's forming the second peak or second trough, if we are seeing the volume is coming declining compare and also lower than the previous the volume recorded on the first rally. Okay, we really want to be aware, and also this is the signal whereby it's telling us it's forming a double top or even a double bottom. All right, okay, so these are some of the trick that can help us to perform better when we are trading the chart patterns. Okay, so upon the breakout of the trend lines, it have very strong rebounds and only start selling down to achieve the double bottom. Okay, so for me, if really I want to say wise, I would say that this is not real. This double top is kind of like a failed double top because upon the breakout of the midpoint, it had quite a strong rebounds. For a good double top, it should hold and resist along this the neckline, the midpoint, and continue trend lower from there. Okay, it shouldn't rebound so much. Okay. Okay, so you can see, for example, on Sunway Construction wise, we are seeing a potential double top as well. And again, after breaking out the midpoint, the neckline, as it rebound back above the midpoint, okay, I would say that this is a failed double top already because there is a chance that it might retest back to the high and or even trade higher. Okay, so the key point that we are trading the some of the other points or keynotes that we want to acknowledge when we are trading double top or double bottom is the midpoint shouldn't be too deep. Okay, 38% or 50% is just nice. Okay, it shouldn't be more than 60%. Okay, and like I said, the low volume during the second peak or trough is an important signal that we want to look for. Okay, yeah, and also like I mentioned, the midpoint, it is a very important levels. If I break and clear the midpoint, we should see the trend to sustain beyond the midpoint. Either it continue to trend lower or it can come back and test the midpoint, but it shouldn't break. For double top white, it shouldn't break back above the midpoint and staying above the midpoint. And for double bottom, it shouldn't be trading back below the midpoint and staying below the midpoint. Okay, if that happens, then you really want to consider that the formation has failed and you don't want to refer that as a double top or a double bottom anymore. Okay. Next one will be head and shoulder. Okay, head and shoulder is like a human. Okay, basically it's forming a high first. Okay, it's still going on uptrend, forming a high and then forming the heads. Okay, and eventually it unable to form another high already. Okay, the momentum has slowed down already, and eventually it form a lower high and break the necklines. Okay, similar on the reverse side for inverted head and shoulder wise, it's going on a downtrend, low and lower low, and we have a very sharp reversal happening. Okay, and from there we are seeing a higher low already is getting ready to form into an uptrend and break the neckline. So how do we find the neckline? Is we connecting the point 1 and point 2. Okay, and that would be our neckline. Okay, yeah. So the entry confirmation, it comes for head and shoulder. Typical execution will be coming on the breakout of the neckline. Okay, we don't do on the reversal, yeah, because it can be a fail one and then go into a sideways consolidations. Okay, for head and shoulder, we really want to look for the neckline also and the breakout. Okay, we can look for the breakout, pullback, rebounds. Then we do one at the breakout, one on the testing on the neckline, rebounds. That's another entry for the head and shoulder, but not at the reversal point on a high low or a lower low, a lower high or a higher low. Okay, yeah. So example on head and shoulder. Okay, do you see head? Do you see head and shoulder right over here? Okay, so head and shoulder is typically is a little bit difficult to identify because it's also another major structure whereby if I connect to you, then you see, oh, okay, this is the head and shoulder. Okay, so one trick to identify the head and shoulder is I'm looking for the sharp drop after after when the chart is still going on an uptrend. Okay, or a downtrend, a sharp rebound if it's inverted head and shoulder. Okay, so for this case, we are having Maybank to trend higher, and eventually we had quite a sharp drop, and then market forming the technical rebounds, but it formed a lower high and breakdowns. Okay, yeah. Okay, so for Maybank case, the neckline is a little bit. This is a special case whereby we can see this is a sharp drop, and during this sharp drop, okay, during this sharp drop happening over here, we can see the price drop from 11 all the way to 8 ringgit something. Okay, on the rebounds. Okay, if we are connecting, if we identify this as the point 2, point 1 is here, the low of the during the uptrend. The point 2, if we use this as our neckline, we will unable to connect. When we connect the point 1 and point 2, if we use this as point 2, we'll be connecting a downtrend, and then we are not getting a proper head and shoulder. Okay, so for this we have to identify a higher low, which this selling has already overdone. We have to refer to the support, another support right over here, to identify this as the second neckline and draw the connect this point 1 and point 2 to connect it, become our neckline over here. And identify this as the second another shoulder. Okay, but do not ignore this neckline, whereby this neckline will be a very this tail over here will be a strong support, whereby we want to mark it as well to identify this area over here is a major resistance, support and resistance level. Okay, so very similar to double top or double bottom. We will be using the high, the peak towards the neckline and as the measurement, and also project the target from the neckline onwards. Okay, so we can see if we're using the first neckline, the projection is more accurate compared to using the low over here. Okay, on the sharp selling. Okay, so on the inverted side, we can see we are using Aseta as our example. Okay, we can see Aseta has been selling down very steeply from 5 ringgit something dropped to 1 ringgit 60 cents. And do you see any inverted head and shoulder over here? Okay, so what we are seeing is we are seeing inverted shoulder from this last swing trying to rebound and another drop, and from here we are seeing it's reversing into an uptrend from the selling trend. Okay, yeah. So if symmetrical head and shoulder, we should have a strong move over here, but eventually it took us more than a year to achieve the resistance high. Okay, but if we connect the point 1 and point 2, this is where we are seeing the change in the trends. Okay, and also the head and shoulder neckline breakouts. Okay, yeah. So after the selling, the slowing down in the selling, and as a rebound, we start seeing volume kicking in. Okay, on the pullback, the volume also slowing down, and the volumes are picking up again, and it breaks the trend line, the neckline. Okay, and if we use if we mark it from the low to the necklines, from the neckline to the high, yeah, we are seeing it achieve the head and shoulder target later, about like 9 months later after the breakout. Okay, so head and shoulder is also is another large structure pattern. Okay, and if we are seeing at the peak or at the trough, which is the key resistance point, a high volume start coming in, it could be indication that it's a very strong reversal that we are looking at. Okay. Okay, so fine. At last we are coming to our very last formation, which is rounding top or rounding bottom. And rounding top and rounding bottom, it's very easy to identify, but it can be a very long-term formation that take months and years. Okay, yeah. So basically, the theory of the rounding top or rounding bottom is very easy. We're gonna use rounding bottom as an example. Basically, what happened on the rounding bottom is the market, these stocks has been selling down. Okay, it was on uptrend, and then something happened, and the price sell down, and it's as it going on the downtrend. Eventually, the sellers get stuck. Sellers, for those who want to stop loss, they have been selling. They lose hope. They are not holding any hope. Okay, eventually there's no one participating in these stocks. Hence, we are seeing the bottoming forming, and that during this period of time there could be some accumulations whereby this smart money or some of this chao they might collect some of the stocks from the sellers, and eventually as the volumes are picking up, we are seeing it's forming the upward curving, and from there we are seeing the turning into an uptrend, and hence it formed into a rounding bottom. Okay, so for rounding bottom wise, we can see that usually it will have a very a prolonged rectangle, a sideways formation is a long one. Okay, and from there you're able to mark the support and resistance over here. And how we engage the rounding bottom wise is upon the breakout of the resistance, you want to go in, or if you want to be safe, you can look out for the breakout of the triangle, sit back and re-break to get it. Okay, or you can put on moving average line as it move away from the sideways formations and start riding on your moving average. You can engage and go in as well. Okay, yeah. So one thing about this rounding bottom or rounding top is it can form into another pattern, which is cup with handle. Okay, after it has breakout and complete the rounding bottom formations, which I'm gonna share with you guys later. Okay, yeah. So one of the example of the rounding bottom is that I'm putting up today is Teosing from 2020. You can see the whole formation. It took 3 years to form. Okay, the steep selling in Teosing, and again test back to the low. Volume is no longer there. You can see how much how little the volume it is just going through sideways, but in between there are some spikes, and but still pressure back down to the bottom. Okay, so you can see it's ranging between 36 cents to 44 cents. There are some volume coming in between, especially when the price start coming up already, then we are seeing more frequent volume. Okay, so you can identify a lot of counters. They are having this formation whereby they had their glory days and they selling down and they move into sideways downtrend, the chip. Okay, you only want to start paying attention. You can check them weekly. Okay, every week or every 2 weeks, and you really want to pay attention is when you are seeing more frequent volume start surfacing. Okay, whereby for Teosing wise it happened in in July 2023. Okay, and start consolidating at the resistance. So upon the breakouts, you can go in at 40, 46, 48 cents, or right on the moving average along with it. Okay, so if we mark on the resistance over here is 46 cents, and upon the breakout of 46 cents, we can see it's just continue move higher, and then it's a exponential upward move. Okay, yep. Okay, so we can see the target price. Okay, so how about the target price for rounding bottom? Okay, the rounding bottom target price, it will be usually at the starting of the selling. Okay, so this is the rounding. So the target price, it will be the starting of the selling, which is at 68 cents. Okay, so for Teosing case, it has moved beyond 68 cents and continue trade higher. Okay, another example will be Miyako. Okay, we can see Miyako is just hit the target price for the rounding bottom. Okay, and also if we look at Miyako wise, you can see from the selling is happened in 2018, sideways from 2019 all the way to end of 2020. Then only the volume start picking in. You can see as it coming near to the rally, the volume is getting higher. Okay, in between during the sideways consolidation, you will see some of this volume. Okay, so what we are talking about here is these are the signal or sign of accumulation, because imagine if the stock is trading, the penny stocks trading sideways, why would be someone trading with a high volume at that level when the price is going nowhere? Okay, so these are some of the accumulation signals that we can pick up, and as we identify that they are smart money accumulating on all this counter, what we want to do next is identify the resistance. Okay, identify a neckline, and also look for more actively trading, actively volume, and also the breakout to get in upon the breakouts and start trending higher for all this rounding bottom. Okay, as for cup with handle wise, like I said, cup with handle is the continuation of the rounding bottom. Okay, so what do we want to see is the breakout of the consolidations, and then the pullback to get it. Okay, yeah. Or another traditional way is after it completed the rounding bottom, then only we look for retracement sync and rebound, rebreak the rounding bottom high to get in, like what we've seen on Teosing. Okay, so we can see on Teosing it has completed pullback, rebound, then we get in. Okay, but suppose it should be a much bigger one. Okay, yeah, this is the bigger one. Okay, so called the handle and rebreak. Okay, yeah, so we can see that rounding bottom wise itself is another very big structure, and this is much bigger than triangle or this double top, double bottom that we are talking about. Okay, and the volume is quite critical right over here. So as like just now I said, there are a lot of counters that they face the selling down, they are going sideways, going nowhere. So one thing, as you're going through all these counters, one thing that you can pick up is you look for those that going on sideways, but in from time to time it has some spike in the volume while the price is going nowhere. So these are the signals that telling us there are some accumulations, and eventually someday when the timing is right, it might form into a rounding bottom formations, and when that form, it could be really rewarding. Okay, but at the meantime, as you identify, these are some of the counters that have signal accumulation signal. Then you mark the support and resistance, and just put alerts on your trading. Let it be on trading view or on your KRS screener. So whenever it tests the resistance level or even the breakout, you might really want to get being informed and start looking into this rounding bottom formation really. Okay. All right. Okay. Oh yeah. That's marked the end of the reversals patterns. And for bilateral, we're gonna just cover one, which is the rising and falling wedge. Okay, which I will be seeing that rising and falling wedge is another short-term formation that we is quite oftenly encounter. Okay, so we can see we have this is the last pattern already. Yeah. Okay, so we can see we have covered quite a number of patterns, like triangle, like double top, double bottom, like head and shoulders, like rounding bottom. All these are the big structural patterns, whereby for a momentum short term kind of patterns, we will be looking at flag, looking at pennant, looking at price channel, and which is another shorter term kind of patterns that we are looking at. Okay, so it's very easy to identify which. Okay, if you see a momentum move and eventually the price continue to move higher, okay, but with a slower magnitude, or if it selling down and going on a smaller magnitude, okay, the price can go up or down. So, okay, it can break higher, forming a continuation, or it can break lower and then going on a retracement. Okay, so generally, when I'm using which, I will use it as a reversal signal. Okay, because for me, I would be seeing that it could be easier. Okay, one of the reason is because if I'm buying on a rising wedge, okay, as it trade higher and continue trend upwards, I will be worried if it continue break higher, whether there will be more people coming in and do the profit taking or not. Okay, yeah, because the price has moved from here all the way up to here if it break upwards. Okay, yeah, so the position size that I'm gonna engage in will be much smaller, and also I might get out earlier. Okay, even though it break upwards. Okay, yeah, so if I'm doing on the retrace, the rebounds, okay, if it sell down, forming the downwards movement, and start coming in with the reversal candlesticks and break the last high and low, that is where I will be going in for a short-term buy positions. Okay, yeah. So how do we identify the wedges? Similarly, we have a rally, and eventually you can see the swing is getting smaller and smaller. The magnitude, the buying pressure is not as strong as the initial rally already. So we connect the high, we connect the low, and you can see that the magnitude is slowing down. Okay, and it's getting narrower. Okay, so upon the breakout, we will be seeing buy, or upon the breakdown, we will be seeing a retracement to come in. Okay, so in YTL power case wise, it is a breakout and then it continues shoot up higher from there. Okay, yeah, so like I said, if I'm engaging in YTL power, I will, if I buy on the breakouts, at most I'm just gonna get 5 to 10%, and I'm not gonna able to ride on this whole strong move. Okay, because as it rally from 1 ringgit all the way to 2 ringgit something, I will be seeing that this outward move is a slowing momentum signal, and I will be worried if more profit taking activity is going to come in. Okay, so personally, I would be using which in this sense whereby I had a sell down, a falling wedge, and then eventually the selling down momentum is getting slower. Okay, it's getting slower, and with a slower magnitude in the selling, we can see the lower low that form is getting nearer. Okay, and upon the breakout, I will be buying upon the breakout of trend line, and still the trend is still a weak trend. Okay, I will be scalping, getting in and out really fast, but still you can see as the price has dropped so much, every 5 cents 10 cents that I'm getting from this falling, which it can be a 5 to 10% profits that we are talking about. Okay, yeah. So the keynotes for the bilateral is, if you are buying on the breakouts, we really want the volume to stay there, and that could be a change in the trend in the if the volumes stay over there and continue to develop. Okay, and if we are seeing that after the breakout it returned back into a trend line, then we might want to, it should give you a warning, and it should alarm you that this could be a potential false break. Okay, all right. So if you have identified all these chart patterns, okay, there might be a lot to remember on all these key points or all these keynotes or characteristics of all these patterns. Okay, but as you practicing throughout the when you're trading, and when you're practicing long enough, and you pay enough attention into all these details, eventually it will just sink into you, and from that onwards, if you want to further enhance or even further improve on your chart pattern reading, you can consider some of these tools. So especially for those that were already using the chart patterns, you might having the difficulties or issues on mastering it. Okay, these are some of tools that might able to help you. Okay, the very first one is the volume analysis. Okay, volume plays really a crucial parts in deciphering all these chart patterns, as particularly on flat and pennants. Okay, you can see for momentum chart pattern like flat and pennants, it's very important to have the volume being read, and the volume has to follow accordingly. Especially during the retracement, we really want a diminishing volume, which telling us that the buying interest remains intact and it will continue to rally. Okay, yeah. And another one will be some of the indicators that offer divergence reading, like MACD divergence, like stochastic divergence, like RSI divergence. Okay, so you can combine this with like wage. Okay, and use it on other reversal chart patterns, which telling you the momentum is slowing down, and potentially we might see a reversal. It could be an indication that the trend is reversing. Okay, yeah. So personally, I use MACD divergence and also stochastic divergence wise to tell me that current trend, it could be coming to the end and also could be turning. All right, to help me to capture some of these major big turns in the trend. Okay, yeah. So these are the two tools that I would say that could be quite useful, and we can do, if you think that these are some of things that you want to know, we can do it in our next sections. Okay, as today we can see that the is also already overshoot a little bit the time, as we cover quite a number of chart patterns. Okay, last but not least is some of the common mistakes that we really want to avoid when we are doing this chart patterns reading is we really want to avoid that. We don't want to barking on the patterns too much, but as we understand the theory, the idea of the patterns. Okay, like double top or double bottom, is the key is testing the support level or the resistance level, and then it's rebounding from the level, and couple it with the volume reading. It helps us to capture and identify the patterns. Okay, we we have to be flexible. I would say we have to be flexible in engaging it as what's the volume or this thing telling us, and don't too bucket on the patterns itself. Okay, but oh, of course, like I said, we some of the key points we also have to follow. Like for examples, for triangle, we really don't want the triangle to have very steep retracement, like more than 50% is just nice, not more than 60%. And also the triangle is a trend following patterns. Okay, we have to trade, the breakout has to be in line with the trends. So we don't want to misidentify all these patterns, all these key categories that I mentioned just now. Okay, and try to avoid jump gun and enter too early. Okay, like just now when I would say for head and shoulder, we don't want to like just seeing the reversal and just get in, but for double top of double bottom, yes, we can. Okay, all right. Yep, so that will mark the end of our section today, our sharing today on the chart patterns. Okay, so for any of you guys who are looking for more sections, more lessons, sharing to learn, okay, do feel free to join us for our section next week on 26th June. It will be focused on the quarterly earnings. Okay, it will help. This section will help us to discover and also find out some of the key metrics that we can quickly spot from the earnings reports and help us to make informed decisions. Okay, and in the sections, our speaker, my colleague, will share you an Excel templates to help you to achieve all these ratios and also the reading of all these ratios. It will be at the same time at 8 to 9 p.m. on 26th of June next week. Okay, so if you're interested, please scan this QR code to sign up. Okay, or you can visit our website packonline.com.my or our Facebook page iPack Online to register the event from there. Okay, so that will mark the end of the sections. If you have any questions, do feel free to drop in the chat box under the comments, or you can always contact us through all this contact below at our websites, or my email, or our dealing line as well. Okay. Also, if you are free, you want to drop by our office in Berjaya Times Square, do feel free to visit us as well. Okay. All right. So if there's no questions, then we will be ending our section today. Thank you very much for joining our sections, and I shall see you guys next month. Thank you and have a good night. Bye-bye.